I'm gonna talk about a startup that we invested in. It's mostly still in stealth, but
Mm.
it's a business that I'm really excited about, and I'll share with you what I can, and hopefully the founder Gerald doesn't get mad at me. But I met a founder our networks who is really rethinking how labor relates to pay. So his whole idea is, why are there every day $1 trillion worth of wages that are unpaid in a week that's basically 14 trillion? Why is it that people don't have the capability to have access to their wages? If you think about the implications of that to compounding, if you think about the implications of that to personal working capital, and to productivity, that really completely transforms the lens of work and wealth. And he, a lot of entrepreneurs we work with think about things in some sort of narrower way, right? When they think about a go-to-market, they say, hey, I'm looking at this kind of customer, I'm looking at this kind of problem, in very disciplined ways. I'm not saying Gerald is not disciplined, but he really took a system approach to to really disrupt the entire ecosystem and transform it. So I think it really challenged a traditional way of venture thinking, which is pattern recognition, which is, hey, what comes first and what comes next, and a way of putting things in boxes that allow us to sort of like understand the de-risking of a business. And I am still learning from him, but I'm happy to work with him.
Hi, everyone, and welcome. We are joined today by David Tswamuno, investor, general partner at Fairbridge VC. David, it's so great to have you.
Thank you so much, Ed. I'm happy to be here.
So, so let's get started. Let's start at the beginning. What inspired you to launch Fairbridge VC? Was there a defining moment or gap in the market that you saw?
Yeah, so I would say Fairbridge is a culmination of my life story, really. Growing up, my dad started his career as a controller of a big firm, so we spoke a lot about business. And then he decided to quit that job and he became a pastor. And then we started to talk about service and how to help people. So those two guiding principles have always followed me. And I think I was looking for a career where I could exercise both. So early on in my career, I started in banking and was really looking for that kind of work. And I met a mentor. Um, his name is Greg Kennedy. He's passed away, unfortunately. And he said, you know what? I think what you want to do is venture capital, and you should go to Stanford. And I went there, and I can help you. So he sort of like guided me to that journey to go to Stanford. And when I was in business school, then I left and started to joined a firm in Connecticut that was really an interesting firm called Emerald Capital. And the whole idea was, we want to invest in capital that has character. So that was my introduction to the idea of investing money with a lens that has certain expectation of that capital for what effect you want in society. At Emerald Capital, we were investing in, they were really a pioneer for investing in what we called better for you then. And that meant, foods with lower calories, sustainable fashion, thinking about the planet. And then at some point, I think I started to really understand that where opportunity really lay was the same lens of investing, but translated to socioeconomic problems. And in entertaining that thought and doing some work, I started to see that there was a big opportunity. Number one, I just started to run into many founders or potential founders who were pretty upset about certain things. And they're like, hey, I don't know what world I'm going to leave for my kids, and I really want to do something. I want to start a company, um, and and you can see that there's just a high rate of startups that are B Corps and public benefit corporations. And the second thing was I could see quickly that technology was advancing very rapidly, and I started to see, business models that I just couldn't have thought about in the economic design and an ability to create products and solutions that are accessible and kind of turn that lens upside down of, hey, I want to develop a product for disposable income. This was much more, I want to develop products for scale. And then third, I just also realized that, the traditional institutions that are today supposed to help in some of these markets, I call them subsidized markets. So if you're low income, you want to access healthcare, you want to access credit, there used to be sort of the government was an entity that was helping you to navigate some of that through tax dollars and products. I realized that these institutions are just struggling. They don't innovate. They're old. They're overwhelmed, and they really have other priorities. You can see right now geopolitics,
Mm.
and infrastructure that's crumbling. So I thought this was a perfect opportunity for private startups to get into this space and start to innovate. And that's really was the idea and the thesis behind Fairbridge, my personal story, this exposure to the idea of capital with character, and then seeing an opportunity in the social progress, socio-economic space.
I really like that. I mean, you know, just kind of talking about sharing some of the values and experiences that really kind of shape kind of the DNA in Fairbridge. I think we're going to come back to that in just a second, but what were some of the biggest challenges then you faced starting a venture fund and how did you overcome it?
Yeah, it's a good question. Everything was a challenge, but let me see the ones that are interesting to talk about. Um, I think, I worked in a family office. I am sort of a nerd, so I really enjoyed being in the library, understanding trends and working with founders. And then when I started a fund, I realized that now I also have to learn branding and marketing, and I have to do back office and operations. So it's basically a business, right? And I think I always thought of Fairbridge as a business in terms of not a series of funds, but something that's representing a way of thinking and deploying capital that's going to last. But once you kind of get in there, you realize that it's very similar to a startup that is a family and friends round, and then like a pre-seed and a seed. So the challenging work is to really translate the story and to build messaging and positioning that can resonate with LPs. I think LPs think about things more like a pie chart and a sliver of where your business fits. They're not necessarily thinking about it as a business per se. And so we struggled a lot with that, and we've done so many iterations to start to get the story much more easier to understand and to translate it to what LPs want to see. And then that obviously translates into fundraising and sales. I just was never really trained in sales. So just trying to bring capital around this idea initially was very challenging, still is challenging, but now it's more challenging from a macro factor perspective, as in where the economy is and a lack of DPI in venture. But people increasingly understand the idea and the market opportunity. So those are the two areas I would highlight.
Sounds like two big areas, but areas that you have um, uh, overcome through kind of your journey
It's a work
and
in progress.
building.
It's a living and breathing thing that we are constantly tweaking and upgrading. So it's fun.
Yeah. Fairbridge is really unique in that it has three kind of key pillars or themes that you focus on: health, wealth, and the planet. Why are these three themes important to you and for Fairbridge?
This is a great question. I think so. The lens that we look at our business is we are trying to, if you look at the last 200 years, there's been so much abundance that's been created. The
Mm,
issue really is there is inefficient distribution or access. And so technology and people are unlocking that. And for us, what we are really trying to do to put points on the board to maximize return and impact is to focus on the areas of widest discrepancy. And so if you look at an individual, an entity, a family, if you have access to economic mobility and you can pay your bills and at least have aspiration to advance in life and you have good health, you pretty much at least have a chance to participate in the upside of what we have created as humans. And planet is interesting because when you kind of like now drill down into it and you look at how environment impacts the two, health and wealth, uh, where you live, and even environmental disasters play a big role in your ability to access economic mobility and even in your physical health. And finally, when we think about planet, we are also looking at the fact that what we call today like energy transition, right, is really in some ways energy addition because demand is surging. And when you look at consumption as an industry, when you look at energy, traditional sources just are not sufficient. So when you look at sustainable consumption and ways of inventing new products and services that are sustainable and friendly to the planet, it's actually more a national security issue and it's a critical need. So we look at it from that lens.
That's really interesting. And I guess, as a segue to that, then how does that influence or how you approach evaluating startups?
Yeah, so we have a pretty a four-step or criteria rather way of looking at startups. When we encounter a startup through many of our sourcing channels, we are really trying to understand, number one, uh, is this a wide enough discrepancy? Is this something that's really a pain for a lot of people? So there is some judgment there, but there's integrity to solving problems that are critical versus nice to haves. And then the second thing we're looking at is the founder. And when we look at founders, we are trying to understand the empathy they have to the problem, which drives unique insight into how that problem should be solved. And we are looking at their track record, their capability to deploy and use technology, economic design and building a business, and their ability to work with others and build teams around their product, and their vision, and also just their temperament. Are they trying to really go for the home run? Are they really trying to do this for the long haul? Where do they stand in terms of commitment? And then the third thing we look at is we just try to understand the economic design, or at least a hypothesis for how they're thinking about bridging a gap in our three areas of focus. And then the last thing we call it investability, and in investability, as a venture capital firm. So those are our four criteria.
I'm sorry, you pause there for a second. If we can just talk about the last two kind of pillars that you were mentioning. It just paused. It glitched for just a second.
Oh, yeah, it's probably
Yeah.
my internet. Yeah, so
No problem.
I can just recap the whole thing. So the first thing
Yeah.
is this a wide discrepancy? Is this really a painful enough progress gap that the founder is attacking? And it's a value judgment, right? We want to solve things that are really important versus nice to haves. The second, we look at the founder themselves and we want to see whether they are qualified. And what that means for us is, what is the founder's empathy or connection to the problem that drives unique insight? What is their track record that allows them to use technology and to build a business that can scale and actually solve the problem? What is their ability to attract other people to work with them? And the last thing is their temperament. Are they really in it for the long haul? Are they going to be resilient to build a startup? Are they committed? The third thing is the economic design of the solution. what hypothesis does a company want to run in this investment round? How do they think about product and service and go to market? How are they designing a business around a problem? And is there enough margin? How do they think about that, both in terms of volume and margin percent? And then the last thing is investability. And investability for us means price. Can we invest at a good enough price in the company? Is there enough capital efficiency for this business to scale without requiring too much capital? And what is the price in terms of impact of revenue, scale of the business, and also the impact to society? And once we are okay with those four criteria, we are ready to write a check.
Sounds like it's a very kind of detailed set, but a clear set of criteria and dimensions that you look at. On that note, what's a recent startup or a founder story that really energized you or challenged your thinking as you think about those four different dimensions to your approach to investing and evaluating startups?
Yeah, I'm gonna talk about a startup that we invested in. It's mostly still in stealth, but
Mm.
it's a business that I'm really excited about, and I'll share with you what I can, and hopefully the founder Gerald doesn't get mad at me. But I met a founder through our networks who is really rethinking how labor relates to um, to pay. So his whole idea is, why are there every day $1 trillion worth of wages that are unpaid in a week that's basically 14 trillion? Why is it that people are not don't have the capability to have access to their wages? If you think about the implications of that to compounding, if you think about the implications of that to personal working capital, and to productivity, that really completely transforms the lens of work and wealth. And he, a lot of entrepreneurs we work with think about things in some sort of narrower way, right? When they think about a go-to-market, they say, hey, I'm looking at this kind of customer. I'm looking at um, this kind of problem, in very disciplined ways. I'm not saying Gerald is not disciplined, but he really took a system approach to to really disrupt the entire ecosystem and transform it. So I think it really challenged a traditional way of venture thinking, which is pattern recognition, which is, hey, what comes first and what comes next, and a way of putting things in boxes that allow us to sort of like understand the de-risking of a business. And I am still learning from him, but I'm happy to work with him.
And I think, it's really interesting. I mean, because, for a lot of investors, they're more than just a check. They play a mentorship role, a supportive role. Sometimes it's just to bounce ideas with the founder. And it sounds like this particular founder who's building a company currently in stealth is definitely leveraging some of that. I'm curious to get your thoughts on what you believe is the key to a successful match between that investor and the founder, and making sure that they have that supportive role that's going kind of back and forth.
It's a great question. The idea of how founders and investors work together is a topic near and dear to my heart, and I write a lot about it. Um, I think, there is process, there's personality, there is competence, and then there's just timing. Those are the things that I see that are at play in investor and founder relationships. And for us as a firm, we have picked areas that we would like to advance, that we would like our capital um, to go towards, and a state of the world that would like to see. And what we now do is we think that all the answers are in the field. So we are really actively looking for founders who have insight that challenges us and elevates our thinking. It's very difficult as an investor to imagine solutions. So I get very skeptical when I see investors who are like, here's the state of things and here's where the world is going. It's almost like upside down. I think the people who are in the field, the people who are burdened by a problem, have the absolute legitimacy or the moral authority to come up with an idea. And then you, as an investor, you subordinate yourself into a learning position within the discipline of what you are trying to underwrite and understanding the risk, and then just going along on a journey with the founder. And I think for us, what we do as a firm, we are really looking at companies that on the outside might appear impacty, social, right? They're not companies that are AI or innovating to go to space, but they're solving really, really important people problems. Sometimes they're not the most attractive businesses upfront. What we do is we are taking those companies as early as possible. We are helping them to, with narrative, with business design, and with just how, with dressing them to become assets that are really attractive and mainstreamable in the venture space. So that's kind of our own contribution and our understanding of this space based on our backgrounds. But that's even more as a friend alongside the founder. But the actual insight and the innovation is coming from the founder. So I think that separation of the player and the investor is really the most important thing.
So if we kind of transition then from the idea, the purpose, the mission, and really kind of identifying some of that discrepancy in the market, when you think about the founders that come to you, and again, perhaps starting the fundraising conversation or the investment conversation, what do you wish more founders understood about the fundraising process before stepping into a VC pitch? Or put it another way, what are some of the common pitfalls or red flags that you see in founders and startups that are just not fit or ready for investment just yet?
Yeah, I think it's a good question. We bend over backwards to talk to everyone. So we are sort of looking at it more how to enable somebody to qualify more rather than a gating, And but I'll say one thing. So a company is a biological organism. So when you have a child, you have aspirations for them. You don't speak to them in like, you actually speak to them in full phrases and you try to imagine what they're going to be when they grow up. So I think the ability to sell a vision of what something looks like when it's grown up and it's matured, and but then bringing us back to this stage of development. What are you going to do now with the capital that we're going to give you? What hypotheses are you going to test? What results do you expect? And what are you going to de-risk? I think that balance is really key. So I meet founders who are selling a lot of the vision, but are maybe light on the immediate, or some that are so much into the immediate, but then you don't quite understand what really are they trying to bring into the world and what does it look like. So that is one area. And then I think I would be not doing it. I would be doing a disservice to other fellow emerging managers if I didn't say this. A lot of capital today is coming from emerging managers. Emerging managers are also startup founders. And I think the more that founders understand that the person on the other side is also building a business that is also new, and in some ways we have so much similarity, you can start to really understand some of the other challenges that somebody's going through that help with expectation management. So I've heard founders talk to investors who are looking to do a first close and then the close doesn't happen, but they didn't ask that question, or a manager that is new and is still kind of learning how to run their own business, and then founders get frustrated. So I think there is an opportunity for both sides to understand each other more, like, hey, what are the challenges in your business? Do you have the funds? How are you thinking about this? So that there's a little bit more vulnerability and openness in that journey of working together. Those are the 2 points I can maybe share for now, but there's more to that.
Oh, I'm sure. You mentioned this earlier, kind of just your experience building Fairbridge, but also some of the things that you look for in a founder as well as in a startup. So if we take into account today's environment, how should founders think about capital efficiency, pricing, growth, and those trade-offs that they might need to make? And I'm just kind of curious, have you seen the engagement or the kind of the dialogue between founders and investors change as the macro conditions continue to evolve?
Yeah, we are in a very interesting environment today because there is macro, there is regulation, and then there is the technological shift as well. So anything that can change is changing, which is good because the rate and speed of innovation means that more tools are available for us to do more with less. So I think the way that I what I tell founders today is try to not look at technology or certain things that are infrastructural as assets. Try to look at them as tools to really iterate and develop and improve what the actual offering is for you so that you're able to change and test and pivot, right? So if there are some APIs and there's a new technology that you can use that helps you to do things better, you want to be able to be nimble and move fast. In terms of pricing, I think what I see a lot of startups in the AI space. What concerns me sometimes is churn. So there is high growth, um, and we live in a world where uh, customers, consumers, even businesses today try things for a little bit and then they don't like it and then they go away. And the question now is, where does your solution fit in a company? Can you go vertical? Can you go horizontal? And have you thought about that? So what are as you think about product innovation today, it's more about how can I improve my offering to anchor my position and my value to the customer. So those are like some of the things that I'm seeing. And the last thing I'll say about that topic is, during the pandemic, we had different kinds of founders. We had founders who said, "Hey, I have this model of the next 6 months, we're going to do this COVID-based model. And then afterwards, we're going to go back to the steady state. And this is like our steady state model." And then we had founders who were just like, well, the world is completely changed and we're going to do everything completely differently. And here's what we're going to do. I call those the paranoid founders. The paranoid founders found success. The ones that were hoping for some reversion to some old normal did not make it. So it's always good to be in a state of paranoia and a state of upgrading your offering and your value to customers rather than thinking about pricing necessarily itself.
Got it. I guess in some ways that could be considered a bit of an unconventional piece of advice or wisdom that you might share with founders. Are there any others? As you kind of think about some of the conversation you've been having, either with your portfolio companies or new founders that you come across and that you get a chance to meet. What's something that they might hear from you that they might not hear from other investors?
Yeah, I mean, I have a lot of these, and they sort of come up when in game time. I think there's one thing. I'll say one more. I hear a lot about momentum and you gotta grow fast and a lot of pressure to prove something quickly that sticks and that scales. I don't necessarily agree with that. I think that when you are trying to solve a problem and when you're thinking about things in terms of hypothesis, you want to find product market fit that sticks. And in an environment where technology changes a lot, it's tempting to sort of like cobble something together that like takes off. But if you really focus on the customer and on the problem, and you give yourself the liberty to really think about solutions that are unconventional, out of the box, you are buying yourself also runway and time to continue to test and launch when you are ready, when something is good. So I encourage founders to think about cash burn and to think about ways to be scrappy and to do as many tests as possible with as little resources as possible, rather than taking capital to get a certain ARR and raise the next round, which is maybe antithetical to your IRR, but it's going certainly to help you with your cash multiple if you find something that actually sticks and solves a problem.
Mm. I think that's some really interesting advice and another way of potentially kind of looking at, especially some of the more earlier stages of a startup's development and growth. We've talked a little bit about Fairbridge's kind of key themes, and I think the way that you said it is, I mean, yes, they might be about purpose and more mission, but ultimately it's really identifying discrepancies of real world problems that have real world impact. And some founders clearly start their companies with that desire. Just trying to take get your thoughts on, do you think that VCs have a responsibility to try to make social impact change as an investor? Or how does a VC balance kind of the investment side of things versus trying to make change in the world?
One of my investors, mentors, told me that you're not the arbiter of morals for others. So that stuck with me, and that's how I live my life. I think capital is a resource to solve problems and to create entities that maybe ameliorate things that we see as opportunities and problems at the same time. So when we are looking at investing at Fairbridge, we are really excited by the fact that markets today give us the possibility and the opportunity to develop products that are sustainable, where people can have agency and can buy things that fit them and that serve their need. So rather than think about it like, hey, I want to bring really, everybody deserves health and everybody deserves wealth, we say, hey, what are people looking for today that they cannot access? And how can we deploy capital towards economic design that creates markets to create products for them? That
Okay.
takes things off our back, because we are not responsible for the morality of the world, for the healthcare of the world. We are responsible for innovating and
Mm.
making in the distribution of what's available so that as many people as possible can access it.
Perhaps this is a good segue then to talk about, and again, it's hard to have a discussion about innovation if we're not talking a little bit about AI.
Yes.
And so I'm curious to get your thoughts about what about AI startups has been exciting you? What are some of the challenges you're seeing with startups that are focused on AI?
AI is a game changer for sure, because at the very least, every company that we have looked at is using AI either in its operational functions to lower cost and do things faster, or in product. We have a company in our portfolio that is the leader in cash flow analytics for accessing credit. AI makes that even more accurate, easier to do, and it's opening up all sorts of opportunities for people who are qualified to access credit. But AI is just another iteration of a lot of technologies that have come that are really transformative and continue to give us the ability to solve problems by creating new economic models or reimagining existing ones. So I also like the blockchain a lot.
Mm.
I think that iteration one of the blockchain was just more trading and Bitcoin and all that other stuff. But the implications of the blockchain in moving money, in allowing transactions to be solved, and in just the flow of capital to emerging markets and reducing the transaction cost is really something that I think is the next miracle, right? So all this to say, we always take a step back as a fund, and we encourage our founders to think of technology as a set of tools that they can pick and choose to address a problem. So we have a few companies in our portfolio that use all sorts of different technologies in addressing a problem. So they're like an AI company that also has like some blockchain components, and that also, and some of it is still a little bit like outdated. But I think AI is going to increasingly become the core engine of most analytical things that we see in companies, but not necessarily the rails, if you may.
Are there any particular challenges then that you see with startups that are focused on AI?
Yeah, I think that just the general, you know, when I meet some startups, they're very eager to start by showing me the demos and how AI is really powering their business in certain ways. And I always try to bring them back and say, well, like, before we really see how this technology works, tell us exactly what your insight is. And I think that in a world where we're outsourcing insight to technology, and I just learned the other day about a prompt to type into my chat GPT to tell chat GPT to challenge my thinking, right? So in a world where insight is converging because we are all putting our questions in the same thing that is spitting out the same answers, and we are also thinking about the same way of innovating, unique insight by default, right, becomes harder to find. And I think what startups are doing really is somebody is thinking outside of the box, is thinking about things that nobody has thought about, and is going through the struggle of creation, right? Creation requires friction, slipping on things, not knowing, like being bothered at night, rather than just kind of waking up and typing it up in chat GPT and getting the answer. So what concerns me it is at a philosophical level is how much do we need these tools to help us to be more efficient, but how can we do that without now outsourcing the fabric of like innovative thought that's differentiated, that's unique. So I see a lot of these startups, and then I see them in waves, and they're all doing the same thing, and they're all AI this, agents that, and I'm just like, okay, what just happened? It's too similar.
Yeah, that's a fair point. I guess, again, I think we've covered a number of different topics, everything from kind of your journey to the experience of building your fund and your firm, and also different types of technologies and engagements. Any final words of advice for founders building today?
Yeah, I think building startups is a privilege. The ability to be bestowed with the desire, the capability, the resources, and the time and the opportunity cost to do this work is not something that we should take lightly. And what this means then is, if you are starting a company, think hard and deeply about what kind of company you want to bring to the world. What do you want the world to look like? How can you contribute to making the world a better place? So I think, there are incremental startups that are making things 10% better, maybe even 50% better. I just challenge people to really go for the jugular, to really go for things that are difficult, things that we need, things that really transform the trajectory of humanity and add value. So it's just something that you shouldn't take lightly if you decide to go and do it, especially if you're capable.
Well, Thank you, David. I really appreciate your unique insights and perspectives. Really enjoyed having this conversation. So thank you again.
And thank you so much for having me.